So welcome back. We are now in segment 5.13. Till now, we have completed entering all items. We have taken the example of Maruti Suzuki and we have entered all items under the relevant heads in the CMA data. So we have taken the P&L account of Maruti Suzuki. We have taken each and every item and dumped it in the CMA data under the relevant head. But if you remember, we have left out certain points and we said we'll discuss later. So those leftover items we will discuss in this segment, right? But what are the items we left out? So I think we have discussed all this: gross sales, excise, net sales, right? All these are cost of material. So here, purchase of stock in trade, this we didn't discuss. And under change in inventory, right? There's something called stock in trade. So that also we have to enter. Employees, finance cost, depreciation, all this. Here, vehicles, dies for own use. This we didn't consider, right? So here in this schedule 27, there are a couple of items which we didn't discuss, right? So there'll be something on stock in trade, and also there's some excess adjustment. If you remember, there's some excess adjustment. So there are totally 4 items which we didn't discuss. So this is the schedule 27. Here we didn't discuss this excise duty on decrease of finished goods, and also this spare parts traded goods in transit. So all this we didn't discuss. So there are totally 4 items which we didn't discuss. So one is the purchase of stock in trade, right? Vehicles dies for own use. And under the change in inventories, we didn't discuss the spare parts traded and traded goods in transit. So we also left out the excise duty part. So these 4 items we will now take up. So purchase of stock in trade. So what is stock in trade? So Maruti Suzuki is into the business of manufacturing automobiles, cars, and it will be selling them. So there is a process going on, manufacturing. So usually in many companies you have this manufacturing. They manufacture, they'll take the raw material, do some processing and sell the goods. But this is processing, manufacturing. But they might also engage in something called trading. Trading means there is no manufacturing, right? For example, if you are a steel trader, there is a difference between a steel trader and a steel manufacturer. A steel manufacturer will produce raw material in the sense that he'll take raw material like iron ore, right, and convert it into steel. So he's doing some processing, some manufacturing. Whereas steel trader will just buy the ready-made steel, like for example TMT bars. He purchases from the steel plant which already manufactured this product. So he takes that from the manufacturer and sells it to the customer. So he'll be just earning a profit. He won't be doing any processing. It is just selling for a profit. It's like your vegetable vendor. So your vegetable vendor in the market, he is not the farmer. He will not produce these goods. He'll go to the wholesale market, right? He'll go to the wholesale market, purchase some vegetables, and he'll come and sell it to you in the retail market, and he earns a profit. So there is no processing involved. This is a trading. Trading means no processing or manufacturing. So in this example, we have an item called purchase of stock in trade. So it looks like the company has bought some already manufactured vehicles or spare parts, we don't know what is that, and sold them. So this is plain trading. This is not manufacturing. So if you say traded spares and traded vehicles. So this is the breakup of purchase of stock in trade. If you go to schedule 48 of Maruti Suzuki P&L account, you are finding that the purchase of stock in trade comprises of spares and vehicles. So it seems that Maruti Suzuki has done some trading. It has bought some spares directly. It didn't do any manufacturing. Bought some spares and sold them and earned some profit. Right? This is the spares, and also vehicles. It has bought some vehicles and sold it. This is trading. So now you have to account for this. So usually where you take purchases, usually we take it in the raw material, right? So for example, forget this is a trading. If Maruti Suzuki actually, if you consider the vehicles actually manufactured by Maruti Suzuki and has purchased some raw material, you are going to show it under the raw material consumption. This we are discussed. So now we are going to show the stock in trade purchase. So please note that the company has earned some sales. So the sales includes vehicles manufactured by Maruti Suzuki itself and also sale of these traded goods. So the company has, when we shown the sales in the same data, so that sales includes both these manufactured and traded goods. So obviously in the raw material also you have to take the total raw material for manufacturing its own goods and also for the raw material included for selling this traded goods. So let us put this figure in the raw material. But then we know raw material we should not take just the purchase quantity. We have to take the consumption figure. This is as per the matching principle. So what we have to take is the consumption figure. So if you remember what we discussed, the small formula, consumption is purchases plus opening stock minus closing stock. So what is the purchase of only this traded goods? The purchase of this traded goods is 15325. So now we need to know what is the opening and closing stock of these traded goods that you can find. If you see here, the under the schedule 27 where we had the opening, closing, work in progress, finished goods, this we already entered. We also have spare parts and traded goods opening and closing stock. So this we can use the formula consumption is equal to purchases which we had earlier in the previous slide, plus opening minus closing. So plus opening is opening of this opening of spare parts and opening of traded goods. So 1108 plus 27, that will be the opening figure. Closing is 1146 plus 43, right? And purchases is what we had in the previous slide. What is the purchase amount? 15325, right? So 15325. So let us have the entry. So this is the amount you have to enter. So consumption is purchases plus opening minus closing, but this is the purchase amount. Opening, this is the opening of spares and traded goods, and minus closing of traded and spare parts. So put together, this is the figure you have to enter. Also we had a this is the item we have to, this is the figure you have to enter in the CMA data. You have to add to the raw material. We already had entered some raw material figure, that is for the manufacturing own vehicles. Now we are going to add this figure to the raw material. There's also an item called vehicles dies for own use. This is similar. This is for internal consumption. So this also you can put it in the raw material. So let us add this 427 also to this. Okay. So let us make this entry. So 15271 plus this 427. So this will be 89615. So 1569.8 crores. So this amount, let us put it in the, let us add to the raw material consumption. So 1569.8. So this we are entering in the, we're adding to the raw material consumption. Already we had a figure of, if you see this figure, already there is 26707. This we already considered in earlier segment while discussing raw material consumption. To this we are now adding the traded goods and the spare parts and traded component, right? So raw material consumption got updated to 28,276.8 crores. So regarding excise duty, right? Excise duty on decrease of finished goods, there is an amount in 289 million, that is 28.9 crores. So since we have a separate item called excise duty, there we are going to adjust. This is an adjustment on the decrease of finished goods. So actually we said opening stock of finished goods and closing stock of finished goods. We already applied some excise duty. So if you remember, gross sales less excise duty, we added the net sales. But then there is an excise duty also on the finished goods. This finished goods we could not sell. This is only the manufactured but not sold. So there is some small adjustment we have to make in the excise duty. The concept is not that important to you. This is an advanced concept. The true adjustment is something which you not be worried. But since we have an item called excise duty, right? Gross sales less excise duty. So under this excise duty, let us have this adjustment. So let us put this figure 28.9 crores in under that particular head. So minus 28.9. Let us have this adjustment here. Okay, we already had the entry for excise duty. We are now subtracting it by 28.9 to have that adjustment. So now the excise duty gets updated to 38,079.3 crores, right? So with this we have completed entry of all items in the CMA data. Now you might come across a term called retained profits. So retained earnings is out of the profit the company might pay some dividend to the shareholders. So PAT minus dividend, you will have the something called retained earnings. Actually this amount will go to the balance sheet and the reserves and surplus. This will discuss in the chapter of balance sheet. Chapter 6 will discuss under the reserves and surplus. So the retained earnings is actually what goes into the reserves and surplus of balance sheet. So the profit earned to the company, it might pay some dividend to the shareholders out of this profit, right? It may not pay. It may pay or may not pay. If it pays, you will deduct this dividend, and the resultant amount is known as the retained earnings. So this retained earnings is the last item in the CMA data of operating statement. In the CMA data operating statement, we have the last item as retained earnings. So this is profit after tax minus dividend. So if you see the profit which we arrived, is the profit in the CMA data. The profit as per the P&L account of Maruti Suzuki is 1635.2 crores. So we also added the same profit in same data. So actually it might seem trivial that both figures are same. After all, we are taking each and every item in the P&L data. We are not done something great. We are taken each and every item in the P&L data, P&L account, and put it in the CMA data. So obviously what is the profit you get here will be the same profit. So but sometimes when you actually do advanced proposals, you'll be stuck. In many cases you'll be stuck. You'll not be getting the final profit figure. So some item you have missed, so you need to do this carefully. Okay. So what did we actually achieve by this CMA data? We have done a whole exercise. We've taken the P&L account of one company, Maruti Suzuki, and we have prepared a CMA data. The P&L account is there, various entries are there, and we converted to CMA data. So what did we actually achieve in the process? So if we actually count the individual items in the P&L account of Maruti Suzuki, the total of 66 items, right? We have seen a number of schedules, right? We have seen a number of schedules. For example, this is a schedule, right? So this other expenses is the schedule. So we have seen various schedules. So if you count these individual items of all items appearing in the P&L account, all schedules, you'll find total 66 items in the P&L account of Maruti Suzuki. Whereas in the CMA data, there are only 20 items because we have clubbed some various items. For example, this rent, we didn't show a separate figure in CMA data. Rent we have put it into the other manufacturing expense. Similarly, net loss on foreign currency, we put it in the non-operating expense. Right? Provision for doubtful debts, we put it in the selling general expense. Warranty, sales, advertising, all have gone into selling general expense. So by clubbing these various figures, a total of 66 items we have converted into 20 items in the CMA data. So the CMA data compresses the data into a succinct format. So as a banker, we are not really bothered about the individual items. So there might be many items, 66 or 100 or 200. We are not really worried about the individual breakup. What we are worried is only the CMA data. The CMA data provides a wonderful format for a very compact format. So these 20 items will be considering. So any company will be converting the P&L data. P&L account may have for another company, we have taken the example of Maruti Suzuki and found a particular 66 items. In another company, you might find some other items, 85 items, or 120 or 200. But again, will be converting it into in the standard format. So any company P&L account will be converted into a standard format called the CMA data. So in CMA data, what we do, we group the various items of the P&L account into major heads. What are the major heads? We discussed, starting from sales, and in the expense, raw material, stores and spares, power, labor, repairs and maintenance, other manufacturing expense, opening and closing stock of work in progress finished goods, selling general expense, interest, provision for tax. So we have some major heads, and only into these major heads will be putting the items. There might be many items, like 100 items in the original P&L data, but in the P&L we'll be converting them into the standard format. So this grouping of items into the major heads is what is the purpose of CMA data. Now, once we have the CMA data, as a banker, you can easily analyze this. This analysis we will take up in the subsequent chapter, but the starting point for analysis is the CMA data. You can't take a P&L account and start analyzing it, because P&L data is split into many items, individual items, many items which are difficult to keep track of. As a banker, you are interested only in the major heads. These major heads are provided in the CMA data. The individual breakup you are really not worried about. If you need the breakup, they are always available in the P&L account, because the P&L account is submitted to you. As a banker, the company provides the P&L account to you. So you will convert that into CMA data. You have the major heads. But if somebody asks you what is the breakup, if your superior, if your boss asks you what is this breakup, why this amount is so high, you can always go to the P&L account and explain. Because this is a standard format, you club the figures under this major heads. Should you require the breakup, this is readily available in the P&L account. So you need not worry about the breakup. So in CMA data, we group the items into major heads. This is the purpose of CMA data. So with this, we'll conclude this chapter, right? We have come to the end of this chapter 5. So chapter 5, we discuss P&L account and how to convert it into the CMA format. We have learned a lot of concepts, right? Even if you don't actually do the CMA part in your job, we have learned a lot of concepts. So we have learned each and every item in the P&L account and understood what it actually means, right? We have understood what it actually means, what are the points you need to consider, and what is the accounting treatment. So if you have any doubt, you can always visit this chapter, run the video again, and you should definitely find the answer. But if you, for example, but in the rare possibility of you encountering a new item that is not discussed in this chapter and you're stuck somewhere in your job, like if you want to know about this item, where you should be classified in the P&L account, feel free to post your query under this website. And you can go to the contact page and have a small post, or in the blog section also we have some articles, and you can post a query, or you can directly send a email to info at createappraisal.in, right? So we'll be glad to assist you, right? Should you require any assistance and classification, if you encounter a new item and you're not sure where to put it, you can contact us. Usually if there is a new item which you don't encounter here, and it is a very small item, the amount is small, usually you dump it under selling general expense, right? If you remember, we have a expense, selling general and administrative expense. So if it's a small amount, usually all miscellaneous expenses go under this head. But if it's a major item, you don't know where to classify it, you can always get back to us, right? So with this we'll conclude this chapter, and in the next chapter, in chapter 6, we'll be discussing about the balance sheet, right? See you then.